here's a company, a victim of its own success. We all know they absolutely crushed it in the first half of the year. And fair enough to kind of Reed Hastings, he kind of had been warning about this, the concern that, demand would fall off and net ads would kind of decline in the second half, given all the pull forward of demand. But yeah, at the end of the day, with the Bulls really hyping this story up into the print, especially some of the big bold shops, it's the weakest sub gain in 4 years. And, clearly they're being negatively impacted by easing government restrictions, return of live sports, and to a lesser degree, increased streaming competition.
How much of this might be, Joel, that you can't make a new show? I mean, let's be clear. Everybody's binge watching everything. You run out of stuff to watch, even on Netflix, which has a lot of great content. But are they able to make new? I mean, you see what I'm saying? Are they going to run out of product that keeps people around?
I mean, they were pretty upbeat as far as their production update went on the call last night. I think they're also taking a more realistic approach, and we've already seen it across Hollywood. I think Batman's been one of the bigger films. Jurassic Park's new films, kind of, we're seeing production delays across the board. It's even impacting the video game industry as well. So it's something to keep an eye on. I mean, I'm in the camp with 2 young kids. I think there's a ton of content on Netflix. Anyone that says they've gone through Netflix is either got to find another hobby or it's just lying. I mean, I think there's a ton there. But I think the problem with the Netflix story, like on an absolute basis, there's nothing wrong. Like, it's still one of the best companies on planet Earth. They're going to continue to benefit from secular trends. But really, there's going to be a lack of near-term catalyst heading into 21. Like you said, the release schedule is going to be a little bit lighter than normal. And then what do we have to look forward to in the next six to 12 months because of those, production delays you just highlighted. And I think there's probably other opportunities in the market. And I think that's what's going to create problems in the stock in the near term. It's just lack of material kind of catalyst. And then on top of it, really just kind of hopefully our lives, returning to more of a normal environment. And thankfully, it seems like the vaccine headlines will continue to be a little bit more emerging, which will kind of dent the work from home trade.
We'll see. I mean, the UK's top scientist telling Parliament yesterday or this morning that COVID's probably going to become the annual flu we're just going to have to live with. There you go. Aside from the stories on CNBC.com right now, by the way. That aside, this is a case where nobody doubts Netflix is a great company, but we got to remember for our viewers, especially the newer or younger ones, great companies don't always make great stocks. I mean, has Netflix's stock time passed?
I think in the near term, yes. I mean, here's the stock that it really consolidated nicely on its 100-day back during the kind of the September tech rout. So that's the level I'm really watching, 489, 490. And my gut is it doesn't hold. And everyone's obviously talking up rotation and whether tech growth, kind of the glory days, easy money's been made. And the answer is probably yes. With the kind of hopefully, like, again, the world returning to a more normal environment, whether that's 3 months, 6 months, 9 months, whatever it may be. I think the large cap tech growth trade is going to take a backseat to some sexier things out there, especially within tech.
Let's talk.
Yeah. Sorry,
let's talk Tesla, Joe. Sorry to jump in. I know a lot of people watch Netflix. I read magazines because I'm old and I like car magazines. And I was actually reading Car and Driver. Shout out to them, by the way. They're doing a great job yesterday. And they had an infographic that showed that Tesla has sold, or more Model 3 registrations have occurred on the Tesla Model 3 in America than every other electric car by every other company combined. The stock is up more than 400% this year. How much more momentum does Tesla have, given those pretty heady stats?
Yeah, I mean, again, in terms of EV technology, they are so far ahead of the game, and it's not even close. There's obviously a lot of big boys trying to play catch up, but that's again another similar to Netflix. It's becoming a little bit of a show me story. Like, there's been a lot of questions regarding the quality of earnings of Tesla over the past several quarters. Obviously they really they kind of count on the sale of regulatory credits. I think they're expecting to sell about 1.2 billion of those in 2020 alone. So investors especially, they want to know that the company can be profitable in their core business, and that's making and selling cars. And that remains a little bit of a wild card with Elon Musk at times, as they've struggled to hit their targets. But again, stocks up 400% year to date, up over 700% year over year. I think it's becoming a little bit of a show me story for those very reasons. We saw similar price action back in 2013. I think the stock was up like 360% that year. and then the stock gained, but the gains were a lot more, limited in nature. So that's where I think we are in the Tesla story right now. No reason to buy it today into the print. And again, I think regulatory credits will kind of weigh on some of the growth investors just in the near term.
Shepard Smith here. Thanks for watching CNBC on YouTube.